Over the past month or two, we have had probably one of the best times investing wise. After that initial market crash at the start of 2020, stocks have now soared up over 25%. Yet, if you look at the economic side of things, it's gone the opposite. Businesses have been closed, earning no profit. 22 million Americans have filed for unemployment benefits. Airlines are making huge losses. Government debt is soaring to all-time highs. And a lot of negative things when it comes to the economy are taking place. So, on one hand, you've got a rise in stock market prices, and the other, you've got the economy looking terrible. This has left many investors asking the question, are we going to see another stock market crash upcoming in 2020? Now, one of the things that I like to do when I ask any question is see what the experts in that field have to say. So let's go to the experts on all experts when it comes to investing, Warren Buffett, and what he's doing. So he recently held his annual shareholder meeting where he talks about his investments and views on the stock market. And what I noticed when listening to this was he had a lot more caution to his voice and what he was saying than he normally would. He said, and I quote, "You can bet on America, but you got to be careful on how you bet, simply because markets can do anything." On October 1987, markets went down 22% in one day. In 1914, they closed the stock market for about 4 months. After 9/11, they closed the market for 4 days. But nobody knows what's going to happen tomorrow. End quote. And normally in shareholder meetings, Buffett says, yeah, you should buy, hold, look long term, don't worry, don't panic. But this year, Buffett's seemingly a lot more pessimistic. But you know, I'm a firm believer that actions speak louder than words. So let's take a look at what Buffett's actually doing. First thing I need to mention is Buffett sold his entire positions in all his airline companies: Delta, American Airlines, Southwest, and United. Entirely sold. The next thing I need to point out is that Buffett did not buy one single stock during the 2020 period. And it's not that he did not have the money to buy these stocks either. He has a cash pile of $137 billion that he would love to invest, but he just can't find any investments worthwhile to buy in this current market. So his actions are definitely pointing towards being more bearish in the stock market. And the last thing I need to show you with regards to Warren Buffett's opinion on the market is something called the Buffett Indicator. The Buffett Indicator is a graph that Buffett uses to see whereabouts we are in the market. As Buffett said himself, it's probably the best single measure of where valuations stand at any given moment. So the indicator measures corporate equities to GDP. Anything under 50% is significantly undervalued. 75 to 90% is fair value, and anything over 115% is significantly overvalued. Now, as you can see, that current data from this graph is well above that 115% mark, telling us that the market is well overvalued. That's not a great sign of what might be to come in the market, especially when it's the main indicator that Buffett uses. But anyway, that's Warren Buffett. I want to move on to another investing expert called Ray Dalio. Ray Dalio is known as the expert who can read market cycles well and the trends of what might be to come. So Dalio has been a lot more forthright compared to Buffett. Dalio has come out and said on a recent TED interview that he thinks the 2020 crisis will be bigger than the one we had in 2008 and will be akin to the 1930s Great Depression. But why does Dalio say this? There's a couple of key reasons. The first is the absolutely massive pile of debt that we're currently sitting on. At the moment, the USA has over $22.7 trillion in debt. This is double the amount of debt that we had in the '08 crisis, and we've really been piling it on over the past 20 or 30 years. If the GDP slows down like it's expected to because of the situation that we're facing, we could see a struggle in handling those high debt levels. The other thing we need to talk about is unemployment. As I said at the start of this video, 22 million Americans filed for unemployment in just 1 month. This means the unemployment rate is expected to be around 16% midway through this year. That's up big time from 3.5% at the start of this year. And the interesting thing is that during the 1929-1930 period, it was a similar story. Back then, it rose from around 6% to 19% in just a couple of years. And we all know what happened in the stock market during that period. It crashed big time. So you got unemployment, you've got debt. And another reason why Dalio thinks we will see a recession in the upcoming year or two is the wealth gap. Now, the thing you need to know is that there will always be income inequality. But in 2020, we are seeing a vast difference between the wealthy and the poor class. It is similar to what was going on in the 1930s. You see, back then, the top 0.1% of people had the same amount of wealth as the bottom 90% of people. And we're coming to a similar situation today where there is a huge wealth gap. This is one signal that the investors, the businesses, the wealthy people could lose some of their capital. Lastly, and perhaps the most key reason why Dalio thinks a crash is coming, is the short and long-term debt cycle. Now, those who have studied a little bit of history will know that the market tends to crash, a recession tends to occur around every 8 to 10 years. Now, it's been 12 years since we've last had a recession. This does mean, when we look at the short-term debt cycle, that we are overdue for one. And it's kind of like the stars are aligning for a recession, because the long-term debt cycle, it lasts around 50 to 75 years. The current one that we are in started in 1945, which means it's been exactly 75 years since we started it. So both the short-term and the long-term debt cycle point towards a recession and then starting a new cycle. Now, the other thing I need to talk about is this kind of reverse world we seem to be living in. You see, the stock market over the past month or two has been increasing, and that's because investors think we are over the worst of what this virus has thrown at us. But what regular investors are not picking up on, but both Buffett and Dalio know this, is the economic impact and data. We will only see this in a couple of months' time. You see, it takes time before businesses make all the calculations on how they've been impacted, and then they release these in the quarterly reports. It takes time before we truly see the effects this virus and shutdown has on our businesses. Some businesses, they will just not be the same again for a while. The airline industry is one of those businesses. Some businesses, it's going to take time before they realize, actually, we can't sell as many products as we did before because people, they just don't have as much money. They're unemployed. And some businesses, as Charlie Munger pointed out, especially the small businesses, will have to close their doors for good. Once we start seeing the true numbers and the true impact of the virus, it is possible that things in the market could take a turn for the worse. So, do we have a stock market crash impending on our doorstep this year? I'm going to be honest, no one knows for sure. All we can do is look at the data and what the experts are doing. The experts that we looked at, both Buffett and Dalio, are quite pessimistic when it comes to the market's outlook over the next couple of years. And the data is telling us the same thing, that we need to be careful during these times. We don't know exactly if it's coming, but if you look at the overall picture, I'm certainly staying prepared.